So let's discuss about foreign currency valuation in SAP. Okay. So before going to foreign currency valuation or foreign currency revaluation, let us understand what is foreign currency and let us understand what is foreign currency transactions. Okay. So
Okay.
what is foreign currency? Foreign currency. So if in SAP, whenever you open any document type like FB60 or FB70 or SA, whatever it is, uh, you will be getting a separate field with currency. You need to mention currency type, is whether it is INR or USD or euros. Just a second, I will be sharing. Okay, so I'm just opening FB60 for example. Yeah. So randomly,
Mm.
so he yeah, here you can see that what is currency. Here you can give manually. So if you are if your company is an Indian, if your company code got created with INR currency, that INR will be your local currency. Okay, your company code currency. While creating your company code, you will be defining currency also at the time of creating company code, like IN, language, and INR. Okay, so my company code got created with INR, so that will be my company code currency and local currency. So by default, whenever you are making any entry, whenever you are posting any entry like FB60 or any entry FB70, whatever it is, system automatically gets your local currency here. My company code got created with INR, so it picked INR as a currency here. Let's say for
Okay.
example, let's say for example, uh, I need one hardware item like any machinery, for example, like any machinery which is not available in India. Let's say for example, okay, from one machinery which is not available in India, I have to purchase from some American country or some whatever. I mean, from foreign country. Okay, maybe American or whatever. Let's assume as American. Okay, so I have purchased this machinery. So what that USA vendor you will be doing? He will be raising invoice in US dollars. Okay, okay, he will be raising his invoice in USD. He won't mention amount in INR. He will be raising in his currency. Okay, so we will be getting tax invoice in US dollars. Okay, like maybe like 100 USD. We'll be mentioning as. Okay, so now I got a tax invoice from foreign vendor. So I need to account this tax invoice in my FB60. So while entering, now here I have to change this currency to USD because the invoice, the amount is in US dollars. Okay, so here if I am giving any currency other than my local currency is INR. Any
Mm.
currency other than my local currency will be foreign currency. It can be USD, it can be AED, it can be JPY, it
Euro.
can be euros, any Australian dollar, whatever it is. Other than my company code, local currency, it will be foreign currency. Okay,
Right.
so simply foreign currency is the currency which is, I mean, other than the local currency or for company code currency. Okay, so
Mm.
any transaction, any transaction which is posted through foreign currency, we can call as foreign currency transactions. Okay, so there comes the foreign currency transaction, because we will be receiving invoices from foreign vendors. And other part, and for other parts, we may be providing any sales. We may be providing any sales to other countries. Okay. Okay. So while we can raise in INR, I mean, most of the time we can raise in INR only, but sometimes we need to raise the same invoice in foreign currency also. If I'm making any sales to America, I can raise the invoice in US dollars, maybe as per the agreement or whatever it is. Sometimes I may be raising in foreign currency also. So at that time, I have to mention as USD. I will be raising my invoice in USD. Okay. So at that time also, foreign currency sale will be made. So we will be getting, whenever we are making a transaction with foreign vendor or foreign customer, there comes the foreign currency transaction. Okay. And maybe we may get any loans from foreign. We can get any loans from the foreign countries. So at that point, also we can able to get some foreign currencies. I mean, foreign currency transactions. Okay. So there are many possibilities just where the foreign currency transactions come into existence. Okay. So this is for about foreign currency. Okay. Next. Next. Coming to foreign currency, how the foreign currency practically works. Let's see what uh, you know how we are going to work out with foreign currency transactions. Okay, let's say for
There will be
example,
exchange rate, I think so.
yes, yeah, you're right. Let us discuss about the exchange rates.
Currently, I am doing that invoice process.
Acha, you're processing that invoice, huh? Okay, okay, fine. So let us assume this is uh, my Indian company, my company, and I want a machinery from a US company. Just I'm just going somewhat little more detail.
Okay,
Okay, so I purchased some machinery from USA vendor. Okay, I purchased some machinery. Purchased some machinery from USA vendor. Okay, so yeah. Now I purchased maybe on let's say for example on 10th October 2024. Okay, so I will be having he has raised invoice for $100. Let's say for example $100, 100 USD. Now I will be having completely INR only. With me, I'm having INR only. So now I have to make the payment to USA vendor in US dollars. He won't be accepting INR, right? He won't take any INR cash something. So we have to make the payment him. For that purpose, I will go to a bank or any institution to exchange my Indian currency with the foreign currency. Here, what I will do is I'll go to bank. I'll give INR to the bank, and I'll take the foreign currency. I'll take the US currency from them, and I'll make the payment to US. This USA vendor. Okay. So first of all, I will be having like let's say for example INR like any maybe. So I have to make the payment for $100 US. No. Let's say for example exchange rate is 85. So I have to take my amount INR 85 into 100. I have to take my 8,500. I will be giving to bank or institution. So in return, they will be giving me 100 US dollars. Okay. In return, I'm giving 8,500 INR. In return, they are selling me 100 US dollars. So I will be then then making the payment, then making this $100 to USA vendor. Okay. So for example, I am I'm exchanging 8,500 INR to $100. Now I'm making the payment to USA. So whenever you have to make the payments to foreign vendors, you have to exchange your local currency with foreign currency with some exchange rate. Then you can able to make the payment to foreign vendors in their local currency. Now I am converting my local currency into USD and making the payment to USD vendor, USA vendor. Okay. So whenever the banks are selling some currency to us, we can call them as exchange rate only. But in exchange rate also, we will be having three exchange rates. Okay. Like exchange rates means three exchange rates are there. We call as B, G, and M. Okay. We denominator BGM in SAP. Okay. So B
What is
means
that?
selling rate.
BG. Okay.
Yeah, BGM, selling rate. Okay. So now for $100, this financial institution or bank is selling at the rate of 85. Okay. At the rate of 85, they are selling. The rate of 85, they are selling. At the rate of 85, they are selling US dollars to INR. Okay. Now, whenever I'm having any US dollars, whenever I'm having any US dollars, if I don't want to use that US dollars, if I want to sell these US dollars to this bank or institution, they will be charging different rate. I mean, they will be giving, you can able to sell to bank or
Yeah.
institution at different rate other than 85. Okay,
Yeah.
maybe
Selling
you
rate
can
is different. The purchasing rate is different.
yes, yeah. So at the rate 83, they can maybe they will accept at 83 rupees because they can able to make the profit with this difference. Okay, though they will be selling at 85, they'll accept for 83 rupees. Okay,
Yeah.
so that is called bank buying rate, bank selling rate. This bank buying rate. So if you go any for currency exchange center, you can able to find these rates actually. Okay, bank selling rate differently and bank buying rate differently. Definitely, bank selling rate will be higher than the bank buying rate because they will be putting up some margin on the above buying rate. Okay, so coming to this is the average between the bank selling rate and bank buying rate. Okay, this is called average rate. Okay, this is just as you know uh, let's assume like 83, 85 plus 83 divided 2. This will be your average rate. Okay,
What you have done?
I mean summing up and divided by 2, that's it. 85 plus 83 divided by 2, that's it.
Okay.
Okay, so this is my average rate. So whenever you want to make the payment to foreign vendors, you have to exchange your INR, and then you can able to make the payment to them in USD. So for that you have to bear some you have to bear some charges like exchange rate,
Address.
which they'll be charging for that for selling US dollars. So they'll charge it as exchange rate. We'll call it as exchange rate. Okay. Yeah.
Okay.
So, for example, as I said, like machinery I purchased on 10th October 2024. Okay.
Hmm.
But on 10th October 2024, let's assume exchange rate is 85. Okay. Let's assume exchange rate or selling rate maybe. Mostly, I'll specifically mention if I want to mention in the rate specifically. For example, if I'm having like exchange rate as 85 as selling rate only, let's assume as selling rate only. So, for example, what will be my entry for a invoice? uh, expense or machinery or purchase, let's say purchases account
Purchase account, vendor account.
to vendor. Okay. So what is my currency? 100 USD, right?
Yeah. Right.
100 USD, or I'll keep USD here. 100, right? Now, whenever I'm making an entry in my books, I will be I'm giving USD as currency in FB60 as discussed.
Mm.
Okay. But whenever I want to prepare my financials, whenever I want to report my P&L or balance sheet, everything will be in INR only. I can't
Yes,
sum up this US amount with the INR amounts and make the balance sheets or P&L. So,
correct.
so to make my financials, at least I have to convert this USD into foreign currency. I mean, sorry, local currency. My company code currency. Let's
Yes,
assume, as I said, I will be giving INR. So, for example, how I will be converting means I will multiply this with exchange rate. Okay, as I discussed, 85. So this will be INR, right? As discussed, this is my INR only.
correct.
In
Correct.
exchange of $100, I got I mean, in exchange of 8,500 US,
8,500.
I got $100. So I'm making an entry with this. Okay. So this is my, whenever you are making any entry foreign currency related entry in FB60, you will be finding two different currencies. Okay. One in foreign currency, document currency, and another will be converted to local currency.
Yeah,
Okay.
first will be in document currency, right? Yes.
Yeah, first will be definitely you will be getting document currency, and you will be able to the same will be converted into local currency.
Local
Okay,
currency.
based on exchange rate as on that date. Okay.
Mm-hmm.
Okay. Now, if I'm making the payment on same day, okay, on 10th October itself, what is my entry? Bank account, sorry, vendor account,
Internet and debit bank account.
bank account. Okay,
Mm.
making the same payment on. Really for asset, I have to use separate GL, but okay, let's stick with the purchase account only. Okay, so vendor account data to bank. So on the same day itself, I am making the payment. So on the 10th October also, I'm having same exchange rate 85. So I will be giving $100, making the payment. I mean, my currency, local currency will be 8,500 only. Okay.
Mm.
Okay. Now, for example, the same thing I have purchased on 10th October, let's say, for example, and now I want to make the payment on 26th October, let's say 26th October. Okay.
Okay.
26th October. I'm purchasing on 10th October. I'm selling on 26th October. And I'm sorry, I'm making the payment on 26th October. Okay. Now,
Okay.
on 10th October, my exchange rate is 85,000, 85 rupees. 85, sorry. Okay. Whereas
Okay.
on 26th October, as you know, exchange rate fluctuates daily. Let's say, for
Yeah.
example, it went to 87. Okay. Let's say, for example, it went to 87. Then this is same. Okay. This will be this won't get changed because 100 USD, 100 USD, and I made payment in 100 USD. But because of the exchange rate, my local currency will be changed, not USD. My local currency is dependent on USD as well as this exchange rate. So whenever this exchange rate changes, my INR will be changing. This local currency will be changing in the document. Okay. Now this will be 87. Should I make it 87?
Yeah, make it.
No, I can't be making it to 87 because you can't change the vendor liability. As I already logged up the vendor liability 8,500. You have to you're making the payment against 8,500 only, but you have to make the payment in 87 with
Yeah,
87 exchange
payment
rate.
in 81,000 exchange
Yeah.
rate.
So we have to change the rate here in the to bank. Okay. Now
Yeah.
there is a difference of 200 here. Okay. My liability is 8,500. I'm making the 8,500 in the debit and knocking off it. Okay. Now I'm making the payment. So I'm taking the same rate which is there on the 26th October. Now if I'm making that amount, it came to 8,700. Now there is a difference of 200 between debit and credit. So
Okay.
because of increase in this exchange rate, I have to pay 200 more. Actually, if I would have paid on same day itself, I would have paid 8,500 only. Okay,
Yeah.
but because of I'm paying on 26th October, I have to make 200 extra, like INR in INR. Okay,
Mm-hmm.
because of the exchange rate, I have to make the payment 200. So I mean,
Mm-hmm.
as you can see in this example, if you have to exchange 20 on 26th, you have to give 8,700. So that only you can able to get $700 because on 26th exchange rate is 87. So only if you give 8,700 only, he will be giving $100, and you can able to make the $100 to USA vendor, right?
Correct.
Right. So because of the increase in exchange rate against the foreign vendor invoice, you have got some loss here. Okay. So this will be going to your
Liability will be same, bank payment will be changed.
yes. Liability will be same. Because of this, you got loss.
What
We
is
call it
that?
as 200. Okay.
Release, what is that?
Realized gain or loss. We call it as realized. Whenever we are getting any loss or gain because of the exchange rate fluctuations, we will
So
account
they
the
will
same to foreign.
separate bill for that.
Yeah. Yes. We will be accounting that to foreign realized gain or foreign
So
exchange
this
realized gains or losses. We can call it as.
this will come at balance sheet at which side?
So this will come at P&L because this is
Okay,
a
P&L.
loss only. It will go
Okay.
to P&L. As I said, like it is a loss to us. Okay. So it will go to P&L. Forex realized gain or loss. It will
Will be
go
it
to
is considered as an expense. Huh?
yeah yes expense or loss, whatever it is. Loss simply because of making 8,700. Uh, it is a loss, so it will be coming under expense in the P&L. Okay.
Okay.
So now you can able to match debit and credit here, debit and credit here. Now the same 8,700 and 8,700, 100, right? Okay.
Okay.
So
So
because
this
of the
entry
changes in
also need to be included in that, right?
yes, whenever you are, for example, in first scenario, whenever you are having the same exchange rate on while you know
Yeah,
posting the
purchase
invoice
date
and
means
making
payment
no
date is same means there will be no change. So
yeah
if the
I mean
payment
not exactly
date is
day, not exactly date. For example, if 10th it is $85, even even if it is on
yeah,
26th also.
depending on exchange rate.
Right. It depends on exchange rate only, not date. Okay. For example, if it is on 26th also, if it is 85, you won't be having any gain or loss. Okay.
Yeah, yeah.
Okay. So whenever your exchange rates are changing, then you will be getting foreign exchange gain or loss. For example, it increased to 80, let's say, because of some reasons. On 10th October it is 85, decreased to 80 on 26th October. Let's put some other entry for that. Okay.
It is the increase scenario. If the dollar rate decreases, then the scenario will be in profit.
Yes, dollar is increases. No, if the dollar rate increase, yeah, if the dollar rate increases, it will be a loss for us. If it decreases, it will be a
That will
gain for
be
us.
gain
Okay.
for us. That will come under right side in credit side of
Yeah.
profit and
Right.
loss.
Right. So now I will be getting as 8,000. So this will be same, and here I will be getting as 8,000. Okay. Now this will be okay. Okay. So this will be whenever you are getting any gain, it will be 500. Okay. Yeah. So based on the exchange rates, you are getting foreign exchange or foreign loss. Okay. So let's check any transactions. Let us go with transactions. We'll go one by one. Okay. FB60. I'm taking any vendor. I'm taking as 26th, no, not 26th. I'm as 13th October 2024. How to take here USD? I'm not taking any GST and withholding to this entry.
You are coming to this FB60.
FB60. Yeah, sorry. So coming to
Yeah, you are posting this entry. First, you are booking in purchase entry.
no, yeah, FB60. Let's say for example, I'm booking in FB60. So simulate general ledger. Okay. Here you can able to see that $100. Okay. Okay, $100. I'm just saving this entry. Okay, I just saved this entry. Yeah. Now you can, as you have posted, you are getting as 100 US dollars. Okay, just uh, just say for example, I took this vendors. Okay, so this is your 100 USD dollars. So whenever I'm clicking on display currency, it has changed to INR. Okay, because on 13th October, my exchange rate was 84. Okay.
Hmm.
Okay, my exchange rate was 84 actually, 84.8 to be precise. Okay, so that is the reason you got 8,480 rupees. Okay, so because of that exchange rate on 13th October, you got 8,480. Okay, now let's for example, uh, just show you some. Yeah, here we will be as we have nowhere given in FB60, we have nowhere given exchange rate. We have just mentioned as USD. That's it. SAP automatically picked exchange rate from backend, and it made it has converted foreign
Into
currency
INR,
into local,
local currency.
yeah, into INR. So we have to maintain exchange rate in OBA, I mean OB08, sorry. We have to maintain exchange rate in OB08 so that the SAP automatically picks the exchange rate from over there and converts the foreign currency into local currency. So you can see here, this is the screenshot from this company code. So on 10th October, I have posted the entry on 13th October. Sorry, on 13th October, let's say my average exchange rate M. As I said, average exchange rate. No, we will do this configuration later. Let us first understand that. My this is M means on M average exchange rate on 13th October. $1 is equal to 84.8. Okay, this is my conversion rate. This is my exchange rate into INR. US $1 is equal to 84.8 INR. Okay, so on 30th October, the entry the amount converted into converts based
84.
on 84.8 exchange rate. Okay, now let's say for example, if I post any make the payment entry on 15th October, I have 85.5 as exchange rate on 15th October. So let us try to make the payment on 15th October. 53. 15th October, I'm giving here. 15th October. So here I have to give USD compulsory because we have accounted in USD. So we have to make the payment in USD only. So here you're also having currency slash rate. You can give manually here exchange rate. If you don't give here, SAP will pick from background. Okay.
Okay. Automatically it will pay.
Automatically it will pick from OB08. Okay. Let's, for
Based
example,
on
if I,
data. Based on
based
data.
on this, based on the latest actually. So for example, if I am accounting, if I am giving posting date on 15th October, if the exchange rate was not updated on 15th October, it will pick the latest updated rate. For example, it got updated on lastly 13th October. It will take the same rate which got updated on 13th October. But if
Yeah.
I updated on 14th October, it will pick the 14th October. Though even I don't update it on 15th October, it will pick the latest rate, date rate. Okay.
Okay.
Okay. You understood,
The
no?
background, what is the latest rate that will pick, that it
Yes,
will pick.
yes, yes. As you can see here, for example, uh, this is, today is 16th October. If I have not updated on 16th October, whenever I'm making any transaction, it will pick this rate because my last updated rate was on 15th October. Okay. So it will pick this rate only. Okay. So for example, I'm making the payment on 15th October. It will be picking the same rate now. What is my amount? $100. As I have given currency in USD, I'm giving the same denomination in USD only. Same vendor code. Process open items. Actually, I'm having different transactions in this ledger. Let's go to FBL1N items. So this is the one. This is the document we have just accounted it. Okay. This is the document we have accounted $100. So 030 document number. So in F-53, this is the entry 030 KR. Okay. This is $100. Okay. Now I'm selecting this KR. Okay. I'm selecting this KR. Now if I am going to here, now you can see here uh, Tata Limited debit, Forex realized loss debit to bank. Okay. So I'm just going example. Yeah, any Forex entry only. I'm coming back again. So automatically you have not given any Forex realized loss separate entry. You have automatically entry got picked up with this ledger. Okay. But whenever, but in this amount column, you have only amount in vendor and bank account. You are not having any amount here because this is US amount. Okay. If you convert the same into local currency, you can able to see the amount here. As I have shown you, here you are not having any amount here. Okay, hello.
You have done in dollars only payment.
Yeah, so this amount is in dollars only. So
Yes,
whenever
yes.
you are converting into INR, because of the exchange rate, you will be getting the same loss or gain in INR only. It will be reflecting in INR only, not in US dollars. Okay,
Okay, okay, okay.
okay. So now I'm saying saving. No, yeah, it got saved with the same. Yeah, now you can able to see here Tata 100 debit and credit both got null. You got this entry. Okay. Now when I'm changing display currency here, you got 70. Okay, INR. Because of exchange rate, you got some gain or loss in local currency. Okay,
Mm.
simply for example, I mean, whatever you are dealing with in foreign currency, you are not getting any loss or gain in foreign currency because only because
Mm.
uh, only whenever you are trying to convert the same into your local currency, you are able to get some exchange gain or loss. So that is the reason you will be getting only that loss or gain in local currency only. Okay, so
Yeah.
this is your local currency, and this is calculated based on the rate which is there on 15th October, which is 85.50. Okay, 85.50 because of 85.5. A vendor you can now. I'm just going back again to my vendor invoice. This is entry care. I'm just opening this. Okay, now in INR you are having 8,400 as expense and 8,480 as in the vendor. Okay, the same payment entry 8,400 in vendor account. Okay, this is the open item. Opening item got cleared. Okay, now vendor debit and credit and both got nullified. Okay, now you can see the same because of the 85.5 exchange rate. You got 8,550, and the difference will be getting in loss.
Yes.